Hi, everybody. This is Robert Chadwick with America Mortgages. Thank you for joining another webinar. We have one of our favorite guests and accountant, CPA, and attorney extraordinaire, Thomas Carden, on with us again. And he will be discussing the big, beautiful bill. Obviously, everybody has seen what Trump pushed through and how will this affect our global real estate clients. So clients are investing in U.S. real estate from abroad. Thomas will go over the benefits and what to look out for, maybe some loopholes, etc. So with that said, Thomas, thank you again, as always, for joining. Maybe you can introduce yourself and
Yeah.
then we'll start the slides. And then after Thomas does his presentation, we'll go over the America Mortgages presentation on the loan programs. And if you have any questions, we will save this for the end, and then we'll answer all the questions at one time. So you can put the questions into the chat box, and we will be able to, answer the questions depending if it's tax related or mortgage related. Also, within the chat box, there is a link for both Thomas's organization and to make an appointment with a loan officer at America Mortgages. So at any time, maybe you have to leave early, you can go in there and you can register to speak to either one of us. So Thomas, thanks again for joining. Please take it away.
Hello, Robert. Thank you. We've been honored and privileged to work with you guys
Thank you.
for several years now. We do a whole bunch of seminars as the endless tax changes keep occurring in the U.S. To give you guys a bit of background, I'm the founding director of American National Tax Advisors. We are, as far as we know, we're Southeast Asia's largest U.S. specific tax firm, dealing with both U.S. citizens living overseas and having to deal with investments in the U.S. and their international income, as well as overseas buyers, non-resident U.S. citizens, non-citizens or green card holders, trying to deal with U.S. investments as well. We also do business-to-business taxation and planning as well. One of our biggest areas of practice coming lately, since we've been working with American Mortgages, has actually been rental property issues and the ownership of that. And I think now we're 28 people here. We're based out of Bangkok, but we've got offices all over Southeast Asia. Just in the Bangkok office alone, we're 28 people. And if you need more information, which I will highly recommend you to, through coming in through American Mortgages, you get a free hour consultation. So you give us a call up and you've got questions, and we don't do that as a sales pitch. We actually give you yes and no answers to this. So there's no charge for that initial hour of contact with us, and we can help you out and help you get you where you need to go. We also offer seamless packages on filing tax returns, both as a U.S. citizen and a non-resident alien, handling rental property ownership in the U.S. So we make it seamless, and you've got the best financing department in the world, and with Robert's company, American Mortgages, works out well. Now, let's go ahead and do the first slide of where you're going to have to pay state taxes. That has increased substantially and giving you more deductions. And here's the other one: the mortgage insurance deduction has been restored, increasing affordability, and this really helps you out in your financing. So if you have to have a mortgage insurance as well, that's now a deductible expense as well. So again, more incentives to help you build that housing out, because you got a 5 million person short or 5 million house shortage on this. They want to incentivize you to do this and buy property. Okay, next slide. Okay, now this is kind of people who are in a very specific area with these things. Okay, it's called an opportunity and affordable housing incentives. Okay, these are in lower income areas. Generally, you have to buy generally in specific designated areas with this, but you get actual credits, which can be money coming back from the federal government, and other opportunity zone incentives. Now, what this is meant to do is in those areas that have a housing shortage but are economically distressed, if you should go in, decide to build a house or buy a rental housing unit in there and construction with this stuff, you can go in and get grants and incentives from the federal government and a lot of states as well, and massively lower your cost on these operations. with this. This is a very specific way to this. And Robert, have you done too many of these, or you have programs set up on these yet?
We don't, but we're not restricted on it.
Yeah, yeah,
But we do have minimum loan amounts, and a lot
yeah.
of times, you're not going to be able to see that.
Yeah, but I think you can. I think you can do some multi-housing family if you want to in these
Yeah,
areas.
absolutely.
I've
Yeah.
I've had some clients who honestly make the most money in their yield by going into these kinds of areas. I mean, at one point in the 2000s, you could go and buy an entire house in Detroit for about 7,000 US dollars with this, and they were renting out for $200 or $300 a month on a $7,000 investment. So if should you choose to go into there, we can work with you and help you get the grants and the opportunity zone credits, and do this, and you can still get the incentives and the financing as well. This is a specific way, but and part of the benefits of this particular program is they've made this easier and they've made this more profitable to go into these areas. So this is a way to look at and begin to maximize it. There's a little more, how to describe it, in these areas. It's a little more a rougher market to deal with because you're in a low income area, but yet that's where opportunity exists, which again, opportunity zone incentives. The government wants you to go into there, and if you do, you can begin to build this, out and make more money with this. Okay. Now, risk limitations and sunsetting provisions. Okay, mostly benefits landlords, but has some drawbacks. Some incentives, like 100% bonus depreciation, will expire after 2029. In fact, these were supposed to expire earlier with several of these incentives, and then of course they came back into power and moved these back to 2029. So generally, when these things are put in place, they generally get renewed period after period, unless the powers that be change radically, which is always possible in our things with this. Um, you know, the government system on this, it raises concerns about increasing the national deficit. That's a political thing, not really something you worry about as an investor. And then clean energy tax credits for property improvements have been reduced. Okay, this is specifically to should you have chose to go in and buy your rental property and put on a solar water heater or solar cells with this stuff. Used to be you would get a more generous credit with it. That's been reduced. However, these things are terribly expensive, and very few landlords actually do this. But those have been reduced a bit, and potential negative impact on rent affordability for low income tenants. I kind of disagree with this one a little bit, but that's one of the things they're talking about is that this may increase rent prices a bit, but if you increase supply, that shouldn't happen either, with it. So overall, if you're looking at being buying property and becoming a landlord in the United States, you're at a better time now than ever to go and do this. The tax codes are getting better for you. Society, there's a real shortage of housing in the United States, and you've got the ability to be, cash flow positive on this, where you're getting a monthly income check that you can either, put in or use to buy more properties with. Plus, you're getting the incentive of the property itself is increasing at around 8 to 10% per year, year after year after year. So, you've got huge advantages in that, you've got regular income coming from it, and that increase of capital is not based upon how much you put in as an investment. It's put upon on how much the property is worth. Let me give you one last thing on this. Okay, you buy a $500,000 property. Okay, you put $125,000 down as a down payment of 25%. Okay, the rental yield on that should cover all the expenses and the mortgage interest and allow you to do this. I think generally most states are around 8 to 10% again. Okay, that should cover all the expenses. But your capital appreciation isn't based upon the $125,000 you put into, it's based upon the $500,000 value of the house. So when you do that, guess what? A 10% yield on this, which is rather on the high side sometimes, on a $500,000 price is a $50,000 per year increase in your investment on a $125,000 investment to this. You're never going to get that kind of return anywhere else. And if you properly play with your financing over a period of time, you can refinance when interest rates get a whole lot lower, and your cash flow improves dramatically. And your tax bill isn't there until you go to sell this. Now, one of the things that we do is we give a free hour consultation on this. This is specifically set up for the changes in the big beautiful bill. But if you are interested in real estate property, you can contact Robert. You can contact us directly, and we can set this up and give you incentives and plan. We also do full turnkey services on helping your taxes be filed every year. So we try to make that as seamless as possible. That's the service we actually do. So, we file for all 50 states. We file federal taxes returns and everything, and we help you, be as efficient tax wise as possible. It's a good program that allows you to do. And, I've been thankful for our work with Robert, for several years now. These guys have helped huge problems of trying to get access in for everybody into the U.S. Real estate market. With that, I'll send it over to Robert.
Yeah, thank you, Thomas. Super interesting stuff. I know there were so many questions that we were receiving on, how is Trump going to impact me as an investor, into U.S. real estate. So I think this really kind of made, I think your presentation really makes people relax and I guess they can be sure that their
Yeah.
investment in the U.S. is just going strong. You know, I think it comes down to education. We see this all the time, almost every day, because our parent company, Global Mortgage Group, does loans all over the world. We always see people investing into the UK or into Australia, even Dubai or some of the other markets. And yeah, it's just phenomenal because I don't think they ever really look at the US because it has this impression of a high tax burden country when it comes to investing. But as you stated, it's exact opposite of that. And I think it's probably one of the most friendliest jurisdictions in the world for sure.
Yeah, we deal a lot with people, all over the world, expats all over the place. And one of the issues, especially in the UK housing stuff, excuse me, the the market is beautiful, the market is good, but especially their estate tax issue in the UK is just really bad. Something happens to you that you have to pay the estate tax bill. Your family has to pay the estate tax bill on that property before it is sold. So if you go buy $1 million piece of property, you got $1 million asset in there, you got to pay your family's got to come up with the cash to pay the estate tax bill, which is stiff in the UK, and then you can sell the property. And so, you know, while the market can be very nice, it's got a lot of issues in and of itself. The US is really, really friendly on how you deal with this, and you can own the property and different company structures and stuff that have an unlimited lifespan and effectively avoid the estate tax issue because the company has a long-term life with it. So, you know, again, the US code is built to try to help investors come in and get rid of that 5 million unit shortage of houses. That's the reason why the tax incentives on real estate are really, really good for rental property. This is, again, I mean, I've been doing this. I don't know how many rental property returns I've done over the generations. No way has been more successful consistently to build wealth than anything I've ever seen than US rental property. It works. It's a long-term strategy. This isn't a get rich quick scheme, but if you reinvest and use your leverage properly and everything, you will make a lot of money over the long term.
On that note, we just participated in a global real estate event in Singapore, and we had a Boston developer with us, and there were all sorts of properties from around the world, everything from Australia, tons of stuff in Dubai, a few other places in the Middle East, obviously UK, Australia. And one of the biggest questions that we were getting at the booth was, why is there not more US property represented? And it's exactly what you had just said. There is such a shortage of real estate available in the US that they don't need to market and sell these abroad. And I think if you look at especially the long-term future hold of real estate, if you're in a market like that, the likelihood of a serious impact it's not going to happen,
Yeah,
unlike other markets. So
yeah, yeah, yeah.
okay.
Thank you.
All right, Thomas. So I will. I'll start our slides for American mortgages. We will come back at the end. I'm sure everybody has many questions. Please put it into the chat, and we will answer it live. At the end of the webinar. And again, if you want to book an appointment, Thomas has been gracious enough to give American Mortgages clients a free hour consultation. That's fantastic savings. So you can book something with him, or you can also, if you want to speak to a loan officer, and perhaps this is the first time that you're dealing with us, and you're not assigned a loan officer, you can go in and book something on a calendar. It's 24 hours a day, 7 days a week, no matter where you are. So, with that said, the general overview of America Mortgage's offering. So, we are both a direct lender and a broker, which means we have by far the best options when it comes to a non-resident. And when I say non-resident, I mean both foreign nationals and US expats looking for mortgage financing in the US. So, we do loans from purchases, refinance, and cash out, which is also known as equity releases. If you're a foreign national, no US credit, you can get up to 75% loan to value. If you are a US expat, you can get up to 80%. What makes the US very unique, besides all these tax advantages that you have as an investor, there is no age restriction when it comes to the amortization of a mortgage. So, based on discrimination or anti-discrimination laws, they feel if somebody is 18 or somebody is 99, they should still have the same opportunities when it comes to investing. So a 30-year fixed rate mortgage is available regardless of the age. Again, a very unique, I guess, structure for the US. We have 10-year interest only loans. How these loans work is they're fixed for 10-year period. When that 10 years is over, you would expect the rate to adjust or to change. It does not. It stays at that same rate, but now you're paying principal and interest for another 20 years. So it really allows you to maximize your rental yield because you're always going to assume that rents are going to go up and your payment, because it's a fixed rate, will stay fixed for that entire time. Loan programs, of course, in all 50 US states. And I'll go through this in a bit more detail, but our most popular program, we don't require the borrower to provide their personal income documents. How the loan qualifies is basic common sense underwriting. If the property can pay for itself, then the loan will qualify. And I'll go into more detail on that in a following slide. If you want to use foreign earned income, you're a US expat, you're earning income abroad, we allow foreign earned income. And we do not require a W-2 if you're working for a foreign company. Of course, all our borrowers are living abroad. This is not a side business for us. This is all we do. And I firmly believe, of course, I'm a bit biased, but I firmly believe that we are the best in the industry when it comes to this type of lending. So this is all dry lending, meaning that you are not required to open up a bank account with a minimum deposit. This is a no AUM requirement. Our loan process is quite simple. We have a very good platform, very secure platform that you'll do the application on. When you speak to a loan officer, they'll send you a link. Once you complete that, we get the documents that are required, which is quite minimal. It's normally a passport, bank statements showing that you have the funds if it's a purchase. And because we don't require US credit, that's not needed. We can normally issue you a loan approval within 24 to 72 hours, depending on how complex it is. And then once you have this loan approval, this letter, you can go shopping. The average closing time in the US is super fast, 30 to 45 days, and you can open the application and you can sign your loan documents without ever having to travel to the US. There's a variety of ways that we can do this. And one thing that we are very, very proud of is 97% of our loan applications get approved. And I mean, this is for a variety of reasons, but the main thing is we know exactly what we're doing when it comes to foreign national or US expat lending. Um, we have a number that's listed on here. This number is a 24-hour, 7-day-a-week phone number. We have loan officers that are based all around the world. These loan officers speak your language, they're in your time zone, and they're reachable anytime that is for your convenience, not theirs. Okay, so the loan programs, I'll go through these quite quickly. This is the loan program that I discussed. This is by far our most popular loan program. A lot of people are familiar with this loan program as DSCR, debt service coverage ratio. It is the way that investment properties should be underwritten, but not always underwritten. At America Mortgages, this is how we do it. So no personal income is required for this loan. So it doesn't matter if you're retired, you just started a new job, maybe you have some uh, lumpy income, whatever it may be, that is not a factor. If the property can cover the mortgage, and when I say the mortgage, I mean the mortgage, the tax, and the insurance, and then perhaps if there's an HOA, as long as there is at least a one-to-one coverage, and we have some that can go potentially below one-to-one, but as long as it's a one-to-one coverage, the loan qualifies. So if you look down at the example, say the expected rental income is $2,400, the mortgage payment, taxes, insurance, $2,400, the loan will qualify. Now, say it does not qualify. So maybe the rent is short, but you really, you know this property is going to appreciate, you're getting a good buy, whatever it may be. It doesn't mean that the loan doesn't qualify. It just means that maybe you have to put down a little bit more than the 25% down payment. So very simple, very straightforward, very easy process. Minimum loan amount on this loan is $100,000. So it allows almost anybody to be a U.S. real estate investor. Next one, if you're a U.S. expat, super common, probably 25% of our business is U.S. expats that try to go to a U.S. bank or even a local bank and maybe in the country they're living in. They get halfway through the process and it just crashes. So most banks, even maybe if you're a private bank member or client, perhaps, but most banks will not allow foreign earned income. So if you are U.S. expat, we make this loan exactly as if you were living and working in the U.S., except you get foreign earned income and you have no W-2. Perfectly fine with us. As long as you're filing taxes and you have a minimum credit score, I believe it's 640 right now. For this one, the minimum loan amount is $150,000, and you need to qualify just like you would qualify on a regular loan, where your debt to income in this particular case needs to be 43% or less of your gross income. AM Investor. So this is quite a unique program. I'm pretty sure we're one of the only ones that has this or features this program. Say you are a foreign investor and your property that you want to buy does not qualify on the DSCR program. So it's not going to cash flow. But I mean, there's a variety of reasons why people would buy it. Maybe it's a very expensive property, or you're going to fix it up, whatever it may be. You can qualify using your income, but it's a very unique way to show the income. As you can imagine, we're doing loans for borrowers, from Sweden to Shanghai and in between. If we had to go through their tax returns, it would be almost impossible. So what we do is if you're employed, we want a letter from your employer. If you're self-employed, it's from your accountant. And that letter merely states 2 years of income and current year to date. We actually have a template that we send you that you can follow, makes it super simple. Same exact qualifications as if you would use income. You can get up to 75% loan to value. Minimum loan amount for this is $150,000, and you have to debt to income qualify. If you're a high net worth client, and when we first started this company, that was our target market. So we had a lot of relationships with private banks, Private banks would refer their clients over, as most people are aware. Most big international banks, except for maybe one or two, do not offer US financing. So private bankers, of course, not wanting to lose AUM, need to have a solution. America Mortgages is that solution. So this is a fantastic program. It allows high net worth clients to qualify in a very simple, easy process. We take a 2 month average of your liquid portfolio. When I say liquid portfolio, I mean cash in the bank, stocks, bonds, etc. And with that 2 month average, we're going to or divide it out over the fixed portion of the loan. So in the example that we have below, say you have a portfolio of $5 million of liquid assets, you're having a 30-year amortized loan, but it's fixed for a 5-year period. We're going to take that 60 months, divide it into the $5 million, and we're going to give you the income that would be needed to qualify. The fantastic thing about that is we do not encumber any of that liquid asset. So the day after the loan closes, you can sell it, you can trade it, you can do whatever you want. So that's our presentation. This is our contact information. There's a QR code that you can scan. I believe it goes right to the group WhatsApp, where you're able to speak to a loan officer, schedule an appointment, answer a question, whatever it may be. So with that said, Thomas, this will be the question and answer time. Looks like we've got quite a few already. Let me see here.
Yeah,
Okay, so what
this is
I'll
the point
do
where my
is
brain will start to hurt.
yeah, well, I think last time we talked for like over an hour just on the questions, but we'll try
Yeah.
to keep this. I know everybody is, we appreciate your time, so we'll try to go through this quickly. So Thomas, I will read the question. If it's for me, I'll answer it. If it's for you, then you can take it. So first one, how does the big beautiful bill impact tax deductions for rental property owners? Now, certainly you went over this, but maybe you can kind of give a summary.
Uh, it actually enhanced them, with it. The idea of this, how do I describe this? This administration is very actually business friendly, despite the rhetoric that goes around. So, and some of the tweaks are seemingly small, but can mount up on things. The reality of it is, especially on the opportunity crisis and stuff, they're going out there and trying to build more housing in the private hands. That's the mentality of this. Instead of trying to build it through the government, let more individual owners build more rental property, give more incentives, and get more people housed. That's the mentality of this. So it really works out to where, yeah, it's beneficial.
Perfect. Perfect. Next question. Are there any changes to how rental income is taxed under the big beautiful bill? I think all of this is sort of
Yeah, yeah,
revolving around the same thing, but
yeah.
certainly it's a lot of interest.
It's again, it's subtle stuff. And if we can't get to you today for some reason with a question, give us a call. We'll set you up in your specific things. Like one of the things about this is everybody's financial situation is rather unique. Like your guys' your guys' options for mortgages can be tailored to the individual. We can help you tailor your tax return and make sure this is efficient for you. But overall, yeah, it's just good, with it.
Perfect. Okay, next question. What are the changes to SALT, state and local tax deductions, that affect rental property owners? I think we went over
Yeah,
that.
we went through this a bit, and again, the salt term is always a fun one, with it because it's like salt in the wound. That's what I always think of when I hear this term. But the reality of it is one of the things when we talk to you about when where we recommend you buy a rental real estate property is in lower tax states. California and New York are especially high tax states with this. California is very easy to trigger an almost 10% tax rate on income with this. If you look at other states, Texas being a very friendly one, it has no state income tax. Florida being another one. For Florida, I actually prefer to buy in Texas at this particular point because of the insurance issues and stuff. But you can look at your taxes and state taxes and have issues on where you decide to go and put your investment in. So you kind of look at your market and say which state gives me the most advantages on taxes as well, which is part of the reason why Texas is booming right now. They're growing very, very quickly, and a big portion of the reason is no income taxes. But should you choose to buy in Massachusetts, as you mentioned, the Boston developer with it, yeah, the state taxes you would pay are now an increased deduction for you. So that's a benefit of being in those high tax states. They've equalized that a little bit for everybody now.
Okay, sounds great. Next question. Are there any drawbacks in the bill for rental property investors? Can foreign investors take advantage of a new financing option under the OBBA? And I think you're going to have to educate me on that as well.
The OBBA is an acronym for the bill with it, and it's the government speak to it. But the reality of it is, I mean, God bless you guys because you've solved a huge problem for so many of my clients as well. I have two nieces who are going to university in Las Vegas. And I'm seriously sitting there going through and looking at the issue of buying a rental, buying a property for them that they stay in, and then we convert into a rental property later on. I would have no way to finance that normally, except through you guys. You have fabulous programs to set that up. In the entirety of this thing, guys, is that with Robert and there's realtors we work with, there's property managers we work with. We've got the tax side handled. What used to be a nightmare of trying to do has been smoothed out. And this isn't just us, this is the US government as well trying to smooth this out as well. The incentives are there, take advantage of them.
Yeah, fantastic. Okay, next question. Will the new bill change how estate planning works for non-resident property owners? Seems like a lot of questions still on this big, beautiful bill thing.
Yeah, the estate tax issue so far, no interpretations have seen changes on this. There is some documentation for foreign tax credits and stuff and foreign assets that may need to be changed, but right now the estate issue stays the exact same. And again, one thing you can do to get that out of your individual estate, if you want to, is purchase this in an entity such as a company that has an unlimited lifespan or a trust that allows it to be free of tax, an estate tax issue. So, there's ways to avoid the estate tax, but that's really the same. No real changes on estate tax. They're talking about in the next generation of bills doing more estate tax reform, but the current party who is in power is very pro lowering estate tax issues across the board. So that will probably get better, but right now, no real change.
Thank you. Thank you. Next question. Can foreign investors now qualify for better mortgage rates than before? Yeah, well, I mean, certainly this doesn't fall under the big beautiful bill or anything, but our rates are come down significantly, especially for some of our programs. So certainly, and then I think just in general, I mean, this is my own personal feeling. With all the chatter going around, I think interest rates will be lowered again, perhaps maybe after the first of the year or before. But I think the most important thing is not to time interest rates. It's just if you're trying to time interest rates, you're always going to lose because we were just talking about the shortage of properties in the US. This also affects the people that live in these properties, the owner-occupied properties, not the investor properties. They're also waiting for rates to drop. And as we saw right after COVID, as soon as interest rates drop, what's going to happen? Property values are going to start to skyrocket again. So you're going to wind up paying potentially 10 or 20% more for that property just to save maybe a quarter on the interest rate when you could always refinance. So, yeah, I mean,
The
I guess that answer is a long-winded answer for that question.
That's a huge. I've been saying this for my clients for a long time. Go ahead and buy the property now. You're getting a discount because when the interest rates go down, the rental yields the price adjusts upwards. But you don't have to sell the property. You can just refinance in year 2 or 3 from now, with it. And that again, cost deductions for doing that.
Yeah. Okay. Next question. What specific real estate loopholes, in quotes, are now open to non-residents? Guess that would be you.
Actually, the weird thing about it is it's in fact most countries the U.S. has tax treaty clauses are called have called what non-discrimination clauses, which means you as an international individual have to be treated the exact same in the U.S. code as a domestic individual. So all of the loopholes, all of the benefits that a U.S. citizen has for rental property, you as a non-resident alien have as well. And that equalization in the U.S. is a real powerful incentive on this. It's been an open market for generations, and it's actually getting better despite the press hype on this thing with it. It's meant to come in and build out, help out build out rental property, to it. So they're all the same. The
Yeah,
depreciation issue, bonus depreciation, expensing, all the same for you.
I think that's that's one thing again when we go back to the education
Yeah,
of real taxes in the US.
yeah,
People as soon as they realize that I think the US is probably the only country in the world again where non-residents have the same tax advantages of US citizens. It's just
exactly.
phenomenal.
And one of the nice things we do with we've been working with you guys, we picked up so many clients doing this. We try to take out as much of the hassle of doing this as possible as well. We offer you a turnkey package, and my goal is to have you for a client for as long as you own the rental properties and help you buy more do this. So, we charge a fair rate. We give you the first consultation, but from us seemingly it should, it'll come in, your property manager will hand us the right statements. We issue this, and honestly, at the end of in the next year to this, it's here's your tax return for the US. Sign this, you should owe no tax anyway. So we offer a nice package and planning on how all this is done at a fair rate that allows everybody to own property and be an incentive as well.
Yeah, I think I can't remember that term you always use.
Cash flow positive, tax flow negative.
Yeah, yeah, exactly right. That's your key line there. Okay, next question. How does the 1% remittance tax actually work, and who does it really affect?
There, okay. I have to get in a little bit of politics on this one. But the 1% remittance was there are billions and billions of dollars of people being in the US working semi-legally and a lot of times illegally who were going in and paying no tax whatsoever, paying no social security tax, paying no taxes whatsoever, and sending money back into different countries. Really, this is those people. They were using their foreign passport to go into a Western Union perfectly legally and shipping money back to whatever country they may have been in, either temporarily. So this was really meant as a tax to try to get something out of those particular remittances that were heading overseas with it. I'm not going to justify the politics one way or another on this. Personally, as a tax person, I tend to be agnostic about politics. I'm just trying to minimize everybody's tax bill as much as possible. But the reality of this is, as a landlord, generally you're going to set up a bank account, or your property manager is going to set up an account for you, and then they'll trans money bank to bank to you. It should almost never affect a real estate landlord in the United States with it, unless in that weird circumstance that your tenant says, I don't have a personal bank account anyway. Can I wire this money through Western Union to you overseas? And honestly, if your tenant's saying that, I'd be a bit suspicious about that particular tenant. But the reality of it is, you'd have to just charge them the additional fee. But this is, these fees are generally horrendous anyway for somebody to go to Western Union, 3, 4, 5% from memory. So 1% tack on this is not really onerous compared to what Western Union charges at the beginning of this. But that's who that's meant for. But the press has blown this up that all international money is going to be subject to this 1%. That is completely untrue. Any type of payment service, Wise, Payoneer, God, there's so many of them now, and or just a straight wire from one bank to another does not is affected by this 1%, with it. So I can't, again, I could conceive of an issue where the tenant is doing this, but I can't actually see it happening. The probability is minimal this would affect any of the clients that we would deal with.
Okay. All right, next question. Are there new depreciation rules that could lower my taxable income?
Uh, yes, no, and maybe on this. Again, that goes back to the bonus depreciation. One of the things our job is when we're preparing the tax returns for this is to look at what is the optimal tax situation for you. The way real estate has worked over the long period of time, especially if you've got a mortgage and you've got the depreciation and you've got the regular depreciation on this, you're generally not going to be taxable on that income in the first many years with us. Now, what that means is if that case on the bonus depreciation, you don't want to take stuff instantaneously. You want to take it year by year by year and spread that out. But there are particular times when you do want to take depreciation. One of the things about in rental property too is you can take a loss against other income if you are a U.S. citizen of up to $25,000 a year. Now, if you're a very high income person couple, that begins to phase out at around $250,000. But you can take that against your other types of income, which is not something you can do very much. Most losses are, even a capital gain loss is limited to $3,000 a year against other income. Rental property is $25,000 a year. So there are times when you're having to weigh both advantages of this. But most of the time I'd say you're probably not. But in particular situations, yeah, this may work for you. And be a bonus depreciation for you. Now, this may be a specifically case if you're owning a multi-unit building and you're going to put a roof on or something, that's when that probably kicks in. But there's times when you say, hey, I'm going to write off the whole new kitchen that we put in this. Part of our job is our package is to maximize the benefits, not just short term, but long term for you.
All right, perfect. Next question. It looks like it's similar questions. This is what are the changes to the state and local tax deductions affecting rentals? So I think we already answered
Yeah,
that.
more on that one. Yeah.
Yeah. Next question. Are there any drawbacks in the bill for rental property investors? Oh, no, sorry, this is the same question. Hold
Yeah, I
on.
think we're looking at. Am I repeating the question somehow?
Yeah. Okay, next question. Do you have a link to estate agents you can recommend? Yeah, absolutely. If you saw our last webinar, which was a few weeks ago, we have a group called NewZip that we're part of. And NewZip is it's a real estate matching service, almost like a dating service, but for real estate. And they match you to realtors in the markets that you're looking at, and it can be multiple markets. The unique thing about them, though, is as long as you use American Mortgages and you use NewZip, there's a 0.5% of the purchase price credit that's given back to you. So not only are you getting I guess a curated placement for a estate agent, but you're also earning money by using them. So yes, absolutely, we can do that. You can reach out to us after the webinar, or if you're assigned to a loan officer, you can ask them for the new zip information. Next question. Could these changes make U.S. property a better investment than other global markets? Wow. I mean, I think even without these changes, it is. But Thomas, I'll let you kind of expand on that. So,
Generally, how to describe it? If you want something less in a society, i.e., cigarettes, you tax them more. When you want something more in a society, you tax it less, and they want more housing. And when they want more housing because there's a shortage, these improvements, yes, they do actually incentivize the growth in the economy and more housing and the price increases in housing. Because as your expenses go down, you obviously make more revenue of this. But also that makes the housing more attractive to other investors and means price moves up. So yeah, this is all beneficial towards investing in the United States and rental property.
that's
Absolutely.
a very good analogy that you used. So, okay, next question. How quickly should investors act to benefit for the new rules? I mean, when do those new rules take effect, basically, I guess?
It actually it's theoretically January 1st with it. Although, you can buy now, and by the time you're closing and everything, you'd be into next year's tax regime as well. So no, buy now, with it. Buy now, especially before, honestly, I agree with you completely. When interest rates go back down, the price is going to go up. You're getting a bargain right now. Buy now.
Yeah, absolutely. And it's still, it's still a buyer's market. So
Yeah,
you have the opportunity to negotiate, to get all sorts of incentives thrown in. Yeah, I mean, logically, you think it makes sense. I'm going to wait for interest rates to go down
yeah,
before I start to buy, but actually, it's the exact opposite because you're going to wind up paying more for the property.
yeah.
Next question. What role will America Mortgages play in helping foreign buyers adapt to these changes? Well, we partner with, if we're not able to do it ourselves, we partner with experts such as Thomas's group. So we have everything in our concierge service from insurance to property management to realtor matching to expert tax advice to moving money. Whatever it may be, we've tried to make the investment process for a non-resident as easy as it possibly can get. Next question. I realize by the time you time rates, it's likely too late. What is your professional recommendation on when to invest when rates are still high? That's, I mean, basically what we were just discussing.
That,
Thomas, I don't know if you want to add anything to that.
yeah,
Yeah.
I mean, I was a finance major in university before I went into international tax and financial service law. But, rates are always cyclical, and we've been at higher rates for a period of time now. And so, I'm not going to judge whether they're going to go down next week or, next month or the beginning of the year. But we're towards the end of the higher interest rate cycle because the derogatory effects on the economy are it's exactly the reason they bring the rates up is to slow the economy down. That effect has occurred, over the past several years as we've been doing this. So, you know, we're not in an upward cycle on interest rates. We're moving into a downward cycle. And the farther that downward cycle goes, the more the price of these assets is going to increase. And historically they're cut in half.
Yeah, I absolutely agree. And yeah, when I hear somebody say, "Oh, I'm going to wait," for the
Yeah,
rates to go lower, it's already set into their
yeah.
brain that that's
Yeah.
what to do. But we try to educate and give them everything that we can to allow them to look at it from a different perspective. So. Next question. The loan you mentioned about no personal income. Can you explain that again? The one for rental properties. Yeah, absolutely. You can Google this. It's called DSCR, Debt Service Coverage Ratio. What it is for example, if you were to buy a commercial property, a commercial building, you're not going to use your personal income to qualify for that. You would use the cash flow of the property. And that's how we look at investment properties. So as long as the property is used for pure investments, we're not going to ask you for your personal income because it's not relevant for the transaction. And when you do that, as long as the rents can cover the mortgage, and the mortgage, has a few factors to it, the taxes and insurance, et cetera. But as long as it qualifies, then the loan qualifies. So it's a fantastic loan program. Next question. Does the U.S. have stamp duties when buying investment properties? Thomas?
No, there are closing costs that you have to deal with, but these are actually minor with it, because there'll be a deed search and these kind of things for this and a title search to make sure that everything is done, everybody's legit, but no actual title stamps. There's no transfer stuff with this. In fact, it's actually remarkably common that people do a quitclaim deed in the U.S., which is literally one form you just record at the local office with this. But there's no actual fees other than maybe $10 or $15 in places on these things with
Yeah,
this.
I,
It's yeah,
I think certain states or actually even counties,
yeah.
because that's how it's
Yeah,
broken down.
literally a few dollars. This is not a
Yeah,
heavy commission.
yeah. It's not like it is when you're investing in most countries.
Yeah,
So
yeah.
next question. I'm 57, recently sold a property in Dubai. as I see the market starting to get oversaturated. If I want to use those funds to buy a property, two questions. One, what is the process? And two, what is the maximum amortization based on my age? Um, Congratulations on selling your property. The process is actually quite simple. For AML purposes, for anti-money laundering purposes, we require that those funds be seasoned, or we need to show where these funds came from on a 60-day basis, so a 2-month basis. Now, if it was the sale of a property, we would just need to see that you had owned that property for at least 2 months, at minimum, and you sold that property, and that property went from, an escrow into you, or the sale went from an escrow into your bank account. It's that simple. Really, it's just more of a AML purpose. And the process is just applying for the loan. We issue a pre-approval letter, and then you can use those funds. What is the maximum age? So there is none in the US. And I had covered that a little bit in the beginning. The US is, I would say, the only country globally when it comes to mortgage lending that does not limit the borrower based on either a specific age or the working age. So you can do the 30-year amortization regardless of your age. Next question. What is the difference in using America mortgages or my local bank in Singapore to get a mortgage in Manhattan? Well, for one, actually, I don't doubt. I know that there is no bank in Singapore that will offer a U.S. mortgage in Manhattan or anywhere. So that's not going to be an issue. But one of the things, and this isn't discussed enough, but regardless of the country that you're in, whether it's Singapore or UK or wherever it may be, um, because we fund onshore in the U.S. and we don't require U.S. credit, there is no reporting back to your home country. So in Singapore, for example, where I'm based, you have something called TDSR, which is very similar to the debt to income ratio. It's the total debt servicing. We don't report back, so meaning that it doesn't impact your ability to borrow in your home country. So it's actually a very unique advantage for that. So. Next question, and it looks like the last question. What is the difference between a rate for a U.S. citizen living in the U.S. and a U.S. expat living in Hong Kong? There is no difference. Again, if you're a U.S. expat, we're going to go off of your credit score. So really, your rate is going to be based on how good your credit is, and then potentially the loan to value. But again, the whole purpose and the whole process of starting this company was for that very reason, to be able to make investing in U.S. real estate, U.S. expat or foreign national, as simplified as possible. So I think we'll end right there. There is, again, in that chat group or in that chat box, there is a schedule or links in there if you would like to speak to someone from Thomas's team or somebody from American Mortgage's team. Thomas, any parting words that you'd like to
No,
end?
I mean it's the again, we're on a downhill cycle on interest rates. And that generally is the best time to buy investments because, that power to be able to refinance at minimal cost here in 2 to 3 years will definitely increase your cash flow. See, right now, you're buying a piece of rental property at a relative lesser price. Because, I mean, think about this. The economy has not been great in the United States because of the inflation and everything, and even with the higher interest rates. But even with higher interest rates, prices have increased year over year on real estate in the United States. So now all you got to do is think about if they've been doing this as interest rates have been going up, what are they going to do when interest rates go down? They're going to shoot up even faster. Good time to buy.
Yeah, absolutely. So, okay, everybody, thank you again, as always. And thank you, Thomas, for joining. We have another webinar, I believe, coming out in 3 weeks, just a general market update. But again, you need to reach Thomas. The link is in the chat. You need to reach somebody in American Mortgages, same as well. Thomas, thank you again.
Thank
Thank you,
you.
everybody, for joining. Have a fantastic day, night, morning, or wherever you may be.
Thank you.
Thanks.